Bitcoin didn't just survive, it's now hijacking power from the elites. From the US dumping gold for Bitcoin to Wall Street becoming its biggest cheerleader. This is the financial revolution no one's ready for. Now, these are one of the earliest Bitcoin maximalists, if you compare it with the rest of the Bitcoiners out there in the community. They're the ones that actually helped the El Salvadorian government to establish the Bitcoin as a national strategic Bitcoin reserve in the country. So they always claim now, and rightfully so, that the US have actually followed suit with what El Salvador has done, and also both Max and Stacy being the Americans that they are, who actually helped President Bukele to do just that. And it's very interesting. I've been following them as well because being the early Bitcoiners, they have an awful lot of experience on the ground in terms of how they've actually introduced the Bitcoin as an asset class to the country. And I've also seen that they've got a lot of programs, initiatives that they've established in the country. In fact, they've actually established under Stacy the Bitcoin office as part of the Salvadoran government, where they actually embark on several initiatives like educational programs in order to raise the awareness of Bitcoin to citizens. They also help bringing the fintech players and the top talent and the capital with it into the country. So they're doing an awful lot of PR work, a lot of educational work, programs, initiatives, and also raising capital and awareness so they can attract the foreign investors into the country, which is what's been going on for quite some time now, which is all the more reason why I've been following them quite closely, because what they have to say, really it adds weight in the Bitcoin community. So there's a few points I'd like to discuss in turn. The first of which is to do with this. Matt actually explained the 5 stages of Bitcoin awareness and why the US government's role is so important in this respect. So he's actually explained, he gave out a huge list of what those 5 stages were. And ever since President Trump has come back in office, he's actually opted, I think the second one, which is to do with converting the shit, as he calls it, the shit coins, which is the altcoins other than Bitcoin, into Bitcoin itself. Now, I have to confess, I'm not a Bitcoin maximalist myself because I'm a believer in other utility tokens, right? But for me, I do appreciate his comment because, as we have seen, ever since President Trump have actually signed the executive order enacting the US's adoption of Bitcoin as a strategic reserve at a federal level, what we have seen, as part of that same EO, he's established 2 things. Establishing Bitcoin as a strategic Bitcoin reserve and a crypto stockpile, which kind of underpins what I just said about Max's positioning of Trump. He's in the point where he wants to sell off the shitcoins or the crypto stockpile that they have through the confiscation of the digital assets in the country into Bitcoin. So using a budget neutral way to purchase Bitcoin without adding additional tax burden on its citizens. And one of the ways to achieve that is what Max has explained, to sell off these altcoins under this crypto stockpile into Bitcoin. Also, ever since Trump have come back to office as well, we all recall the preceding administration, the Biden administration, and all the rest of the anti-crypto crew. Well, ever since his arrival, there's been this Washington 180-degree pivot. So what was once that crypto hostile administration or territory is now becoming rapidly a Bitcoin's policy hub, digital assets hub. So it's a clear shift from tech novelty to geopolitical leverage. And as the last point I want to leave here is what Stacy has alluded to at the end of the first clip that I've shown you, around using the El Salvador as that definitive blueprint for other nation states to copy. As I said, President Trump have actually copied what the El Salvador has done in terms of nationalizing the Bitcoin strategic reserve. But she's actually goes on to say, well, we need to ensure that the rest of the nation states follow suit. There's not enough to just sign an executive order and then establish the Bitcoin strategic reserve at a national level and forget about it. She's actually hinted some rather novel ideas interesting ideas on how to achieve budget neutral ways to acquire Bitcoin. She's made two very important, clever suggestions. The first of which is around gold. We all know that, as with the majority of the countries, not all of the countries in the world, and the US is no different, they have a stockpile of gold reserves. And what she's suggesting, and in fact this is something that Senator Loomis is doing as we speak, is to actually take the gold themselves, maybe more on the gold certificates, so these paper certificates of claims of gold that they have in their stockpile. Well, you sell the paper gold certificate themselves at the current market value price of gold, which I think is hovering around $3,300 or $3,300 per gold of ounce. Well, you can sell those paper gold certificates at that current market value of gold in order to purchase Bitcoin and store it in its US SPR. That is very interesting, and I've actually explained this same method in one of my other videos, which is all the more reason why you ought to subscribe to this channel to learn a little bit more. And also the second final suggestion from Stacy is a notion around bit bonds. Now these are like how we can tokenize the US Treasury bills on the blockchain, particularly on Bitcoin blockchain, so we can make part of the principal amount of that government bond issue to include Bitcoin. And when it comes to maturing those bonds, so where the government has to fulfill its obligations to pay back both the principal amount as well as the interest rate to the bond investors, well, upon maturity, when they sell off those bonds and make those payments and obligations, they'll be able to capitalize the difference between the Bitcoin portion of that bond at the current market value upon maturity and then cash in the difference. And that's a perfect way as to how both the government makes money and use that extra cash flow to purchase more Bitcoins and store those as part of the US Strategic Bitcoin Reserve, as well as paying back both the principal amount and the interest of the bond loan itself to the bond investors. So this is what is meant by bit bonds. I just thought just to clarify what she meant by that, because this is going to be quite an important incentive for other governments, not just the US, even though I emphasize a lot about the US. In fact, you can easily extrapolate and replicate these models into other governments, because this is something that all governments around the world can copy, because Bitcoin is a global asset. It's not a US asset at all, right? It's a global blockchain public ledger system that cannot be tampered with, that cannot be changed. It's the ultimate truth network there is. So being a global asset, these ideas can easily be replicated by other national governments around the world. So this is something that is rather interesting. And this is the first clip that I've shown you. I'm going to move on now to the next segment, which is around the socioeconomic impact of Bitcoin adoption. Now, Max have actually started off this segue on back in the 80s and 90s, where governments have been involved in making a lot of subsidies, and he made claims around subsidizing housing. So there's been an awful lot of social needs, and there may be legitimate needs at that moment in time to subsidize housing to make it affordable, but they don't really realize that even though their intentions were good and that it solves part of the population who can't afford housing, what you're in effect doing is you're overinflating the cost of housing as a result in the medium to long term, which is what's happening, right? And he gave another similar example on inflating student loans, subsidizing student loans from universities, so enabling students from more humble, impoverished backgrounds to be able to access university institutions at a more affordable rate. Well, the same problem happens with that. You're overinflating the cost of future university programs, the cost of gaining access to these university institutions. You're just overinflating the price, right, as a result of these subsidies. So we all know that inflation is bad. The subsidies are a bad thing to do because they're fueled by money printing, not by real productivity. So subsidies equals inflation, which is not a good positive thing, particularly into the medium long term economic outlook. So Bitcoin stops that cycle. It kind of stops that subsidy freight train where everything measured against Bitcoin would end up being to zero. And this is the point that Max tried to explain, that the Bitcoin, ever since its inception, has stopped this notion of offering subsidies, free money to the electorate, to citizens. And as a result, it fixes class disparities, because under a Bitcoin world, there are no credit scores or zip code based discrimination. In effect, if you own one Bitcoin, it equals one Bitcoin anywhere on earth. That is the bottom line. So rather interesting take from Max there, talking about the socio-economic impact of Bitcoin adoption. Let's move on to the next segment, which I find interesting. Is to do with this lesson learned and the 2008 GFC, the global financial crisis, and the fiat's moral hazard as a result. Now, Stacey have actually started this conversation saying that banks typically have always been treated very well, in fact over generous by the taxpayers, by us. And why is that? Because banks have always been bailed out in signs of trouble, in signs of financial crises, and the individuals is not the case, right? So we have, on the one hand, the banks are being bailed out whenever there is a financial crisis. They are always the first to be bailed out, whereas the individuals, we're not bailed out. We're not shown the same sort of leniency as we have shown on banks and financial institutions in times of trouble. So he made the point, Max, that this is not a problem specific to the US. It's actually global. It happens elsewhere. Fiat always protects the fraud, always protects the elite and the collector, whereas Bitcoin breaks that feedback loop because it is an egalitarian asset. It's a global asset where everyone can participate and join and part some of its wealth into the asset class itself in order to preserve their capital and even help to grow it in the long run. Which leads on to the Stacey mentioned around the proof of work, which equals moral reset. As she explained, it makes plunder harder than production. So that's how you realign civilization. So in effect, what she's trying to explain there is you make the cost of plunder higher than the actual cost of earning the day's labor. Well, that's what she meant by proof of work, which Bitcoin is a proof of work mechanism, consensus mechanism. So Bitcoin, in effect, breaks that feedback loop and helps realign civilization. Also, as a final point in this segue is fiat equals rot by design. It's not a glitch. Fiat rewards shortcuts, but nevertheless, Bitcoin punishes them because there aren't any shortcuts. In this system, laziness costs you and impoverishes you in the long run. And that is the point about why the proof of work is such an important type of consensus mechanism in the blockchain, because making it difficult to mine new tokens, in this case new Bitcoins, through electricity, computational power, solving highly complex mathematical problems as a result, you're making it difficult to mine new Bitcoins because you want to make it scarce. And that's really the only way to achieve that is making the network adjustment difficulty very, very difficult, thereby creating less coins, less Bitcoins over time. And that is the beauty of the pristine design of the Bitcoin asset itself, because in effect it punishes shortcuts. It punishes those that do commit those blunders over and above earning a day's labor of work. And that's the only way. Proof of work is the only way to reward those that actually put in that day's labor in their work, and thereby punishes those that want to shortcut the system. So laziness costs you and Bitcoin punishes them as a result. That is the point in this segment from Stacey. Now this moves into the last point about what is hash rate, the hash rate and the network growth, and why they are real fundamentals aspect of the Bitcoin ecosystem, the Bitcoin network itself. Now Max explained that hash rate really equates to trust. So when miners are bullish, the network strengthens. Scarcity plus security attracts serious capital. Again, this is why proof of work is such an important aspect, which is in stark contrast with other blockchains that are run under a proof of stake, which means that it's based on the amount of capital you put in are the ones that are going to get most out of the system. That is not what Bitcoin is, or indeed any other proof of work consensus mechanism type blockchain is all about, right? So in this case, hash rate is the amount of computational power that is used to safeguard the Bitcoin network system itself. And this is why Max attempted to explain that we shouldn't be too distracted by price. According to him, price is noise, whereas hash rate is signal. So if you unravel or unpeel the notion of hash rate, we should be focusing more on the hash rates, which is in its exahash rate range. I can't remember how many exahash rate per second it is at the moment, but the ultimate signal that we should read from hash. So the higher the hash rate, in effect, the higher the price of Bitcoin will be in fiat terms as a result. But nevertheless, what Max wanted to explain here is we shouldn't be caught up too much on price, particularly to those of us who have a high rate of conviction of the asset class into the long term. We shouldn't be at all be distracted by what the current price of Bitcoin is at any moment in time, right? Because it's just noise, pure noise. Whereas what we ought to be interested more in is in the current rate of the hash rate itself. Because like I said, the higher the hash rate, the more secure the network is, and the more serious capital will eventually get drawn into the Bitcoin network itself. So Bitcoin, in effect, has gone from being that pirate radio to a global monetary revolution. So we need to watch hash rate rather than the Bitcoin price itself, and certainly not the headlines. So that is really what I wanted to cover in today's episode. And the final closing I'd like to make on that is what they said here is actually bigger than just Bitcoin price itself. It's about system change. And if you're still measuring Bitcoin in fiat terms, well, you're actually missing the plot. Fiat rewards corruption, whereas Bitcoin rewards truth. The US is waking up, Wall Street is all in, El Salvador showed it works, and the global south is watching. If you're not stacking with purpose, start now. That will be my advice. Smash that like button, share this video with your colleagues and friends, and hit the subscribe button for weekly deep dives on Bitcoin, blockchain technology, and the future of finance. This movement needs voice like yours. Until next time.